All right. Thanks for joining me, guys. This is David and Marty from Calm Capital. We were talking about a few things before I hit the record button. I think probably the best way to start, though, is actually to clarify what Calm Capital is, because as I was just saying, it's not the most common business. I've come across a lot of big venture capital firms who do this sort of thing, but this is kind of like almost like a home business version of it, although it's way bigger than that. But, it's a couple of guys coming together and with a strategy. And I'd love to talk about, what it is, why you decided to do it. But let's start with the obvious. What exactly is Calm Capital?
We are realizing we've done a couple interviews at this point, not many, and how rare it is to have two guests on, for something. But, we listen to a lot of these podcasts where they have founders on that have co-founders, and we were always like, well, let's see if they'll let us both be on, because Marty and I, we kind of joke, like, together we almost make a full human. He thinks about things differently than I think about things, but together we, at least to this point, we've been fairly effective at running the companies, because we both have different strengths. And so I think it's been both of our answers, since they'll be about 80% the same. Yeah, but 20%.
Yeah, keep going, David. So what is Calm Capital from David's perspective then? Let's start with that.
Oh yeah, good. So see, that was my sneaky way to just completely take over the conversation from Marty. No, I'm just kidding. So Calm Capital is a holding company that mostly grows through acquisition, but has a number of companies that are right now mainly in creative services and software and technology, but are really its goal is to just acquire really good, simple businesses with good people from good people, and kind of utilize the skills that we have learned over years of helping other companies grow and develop and innovate, for companies that are kind of within our umbrella, and to provide an environment for people to work in and to be a part of that is hopefully a little more aligned with the values and rhythms that they are looking for in their life.
Yeah, so we started Calm Capital after many years of talking about it, basically. And David and I we've been friends for 20 years, but we've had kind of different paths to entrepreneurship and starting and owning businesses. David's got more of a marketing and design background. I come from a computer science and software engineering background. And, a couple of years ago, we found ourselves having started things independently, starting things with other co-founders, but then also starting things together. And I think that those things that we had started had a certain amount of value. And we thought, well, what if we could kind of seed a holding company with the current value of those companies, and then also be able to leverage the cash flow from those, and also raise a little bit of capital in order to start growing through acquisition. And so, yeah, so that's what David kind of described it the same way I would describe it. Yeah.
Okay. Yeah. So, and can we talk a little bit about, numbers? How many companies do you currently have? Because it is, like you said, you're like a Berkshire Hathaway kind of business, right? You own all these companies that operate separately. They all have their own CEO, which could have been the founder of the company, or maybe not. And like you said, the cash spins off into your holding company, and you can then use that potentially to buy another company. And it is very Berkshire Hathaway-esque on a kind of an internet focused manner. So is that accurate?
Yeah, I mean, we obviously we love those comparisons, and someday they'll keep being more and more true. But yeah, I mean, that's basically how it is. We really want the companies to operate independently, and have their own value, their own management in themselves. So it's not like a PE model or anything like that, where there's a bunch of employees at Calm Capital. There's none. It's just David and I. Yeah, to answer your question more directly, there's 10 companies today, and there are just under 80 employees across, or 80 folks that work at the companies across all the companies, including David and I. And revenues are right around $8 million overall. So, yeah, that's about where we're at right now.
8 million annually, I would assume, to clarify. Okay.
Yep.
So I've got your list on your website: Loft, Crew Pay, Honestly, Wave, Augusto, Pttrns, Proteus Themes, Creative Farm, Catch Commerce, and Lifebinder. That's the current portfolio, if I got that correct. Obviously a range of companies there. So I'm so curious about the business model. I love hearing that it's just two of you guys. I'm jealous in some ways. I feel like this is a way for an entrepreneur to be entrepreneurial without having to run the company. Plus, you get to do multiple companies, which, let's face it, every entrepreneur kind of wants to do. We always want to have more than one project, right? So you kind of get to do that. Before we talk about today, though, I do feel it necessary, as I do on my show, to go back in time. You said you've known each other for 20 years. So was there a time before you knew each other? You guys meet in like high school or something? Or I don't know how old you are.
I wish we were that young. We met a little bit after college. I was playing mini tour golf. I was a professional golfer, not a very good one, but was trying to play. And Marty and I met at a Best Buy of all places and started talking about golf. I was on my way out of town.
How does someone meet at a Best Buy?
Marty does a better job. Wait. Before he does it, I just want you to know, anybody that knows us is going to laugh at this, because we would never talk to a stranger in a store unless they cornered us and started talking to us. So it was completely a divine meet there.
So David had golf shoes on in Best Buy, and I found that odd, and back then, a lot of the golf shoes were the traditional kind of leather saddleback style golf shoes. And I don't know, I made some comment about he's looking at CDs and wearing golf shoes, and I struck up a conversation, and he said all the, we're dating ourselves with the fact that we were buying CDs, right? But new music would come out on Tuesdays, and he was headed out of town for another mini tour event, and I was looking at music or whatever. So anyway, that's how we met. Just had a lot in common, became friends. Our wives are friends,
Just to clarify, so David, you were an aspiring professional golf player. Marty, what were you doing at that time?
Yeah, so I was working for a kind of one of my first jobs out of college. I was working for like an internet startup. They were part like ISP, building websites, things like that, and building a little bit of web products. So I was a programmer, first job out of college. I had just moved from Michigan to North Carolina and was new to the area. Yeah.
Okay. And David, you wear golf shoes like every day just normally because that's just how you get better at professional golf, or?
And nowadays, the golf shoes look like tennis shoes. So when I'm not wearing Vans, I am typically wearing True Links, which are hybrid golf shoes that you can also play.
And David, I just want to clarify too, when Marty started talking to you, you didn't think he was like hitting on you or anything like that. This was just a normal day, right?
And I was probably so focused on the music that I was going to distract myself from a 6 or 8 hour car drive that I probably just didn't think about it. And quite honestly, when you're in the golf bubble, you don't think about it being weird until someone calls you out on it, and then you're like, oh yeah, I guess this is kind of strange. So
I can see, Marty, you bring or brought some technical background to even view the internet as an option. But can you guys connect the dots so you meet? I'm assuming, David, you drive off to your next golf tournament. Marty, you go back to work. How does can you take us forward a few years? Did you guys not do anything together yet, or would just have a friendship? When did you start looking to work together in some shape or form?
Yeah, I mean, I would say the first decade or so is just regular friendship, getting to know each other, playing golf, talking about business, talking about We love to travel. We both had, I'd say that the commonality there too is we weren't 9 to 5, work in an office, work in a cube, work for other people very well. That was probably the common bond of all things, so the wanderlust of wanting to travel, the ability to live in multiple locations. So obviously remote work wasn't super popular in the early 2000s, but we were already kind of thinking down those lines. So it was mostly first decade, I would say, is just mostly a friendship and getting our own skills, right? And getting our own, experiences in the world. And then, I think, what was it, David? Probably 2010 or 11, we started working on a product which we never launched called Golf Monocle, which was interesting. It was this is just some ideas around the golf industry and software and bringing together like golf directories and trying to help people find amateur golfers trying to find, tournaments they could play in and other golfers they could hang out with. So it's kind of funny. The first software thing we worked on was also related to golf, which we got it pretty far along and we just both got busy with other things and kind of never launched it. But that was the first time we really started working on software stuff together, as I recall.
Yep. Yeah. I went out on my own in 2008. I was, after I quickly ran out of sponsors and talent, I had to get a real job, and had always kind of done side work, a copywriter and marketer, and ended up as a marketing director at a software QA and testing consultancy. And they were one of the first companies to do agile test automation. So, that kind of got me into product development, and this was the world that Marty was already in. So I would ask him ideas and we would talk about it a lot. And then in 2008, they moved my job up to Connecticut, and I was married, didn't want to move. And so then, I found myself unemployed, minus a couple of side, hustle, freelance clients. And then the company hired me back, as a consultant for a while. And I was like, I kind of like this freelance work. And through that, just developed several agencies. Marty eventually kind of went into that world. And, for us, it's just very natural to work with multiple clients on the agency or consultancy side, right? Where, the agency that, honestly, that we have that I had started, there's, a dozen, 20 clients there that we were already, siloing, compartmentalizing the way we thought about those. And we were kind of like, well, we do all this work for our individual clients. What if we were our own clients? And we feel like, whereas a lot of people feel like, if you're an entrepreneur, you got to dive into that one thing and that's the only thing that you can focus on. And we're not wired that way because of our experiences. We were always working with multiple clients at the same time. So it didn't seem like a big deal to say, well, let's get some companies that are already cash flowing and already real businesses. Because I do believe if you're going 0 to 1, it's way easier to do that when you're focused on one thing, right? Because it's so hard to overcome the inertia of getting validation and revenue, coming in. But once you've achieved that, it's a lot easier to work on multiple things, and you kind of learn this over here that you can then apply to this over here. So that was kind of the seeds and kernels of this idea of, well, what if we had a services company that was serving its own portfolio of companies? And that's kind of how the conversation started.
Interesting. Yeah, I hear so many people talk about having an agency at some point, in their history, if you're an online entrepreneur or working for one, web design, social media, something like that. And then eventually something happens and there's usually a startup or a business that spins off from that. And that's why I'm talking to them on the podcast, basically. That's their current business. You guys are a little different, though, because you saw, like you just said, David, the controlling and supporting different companies, and you thought, we could potentially do that, but own the companies, which I guess is not that big a stretch. Like I remember, I had a friend who was doing AdWords for clients, and I thought, well, why don't you just do that for yourself? But you could just acquire that company, and it's same sort of thing. But I'd love to just go back before we talk about Calm, because I do want to dive deep into Calm. But What happened to the golf website? Why did it fail? What was that first work together project?
I don't know if I have a great answer for that, other than life and busyness and just deciding to stop. I'm sure it's my fault, right? Like, I'm sure that I just stopped having the time to do the dev on it. Yeah, so I think that's pretty much it. We actually still own the domain. I saw the renewal email not too long ago. The code is somewhere. It's not necessarily a irrelevant idea either. Maybe we'll resurrect it one day. But yeah, I think we just got busy, Yarrow, to be honest.
Yeah, it was 2010. We were starting to have kids, and the only, I'm not super technical. I understand it enough to communicate it, but I can't, put hands on keyboard and build anything. And when you're trying to do that with a full-time job and starting families and stuff, it just wasn't a priority. And also, I think, at the time it was somewhat, I think we were a little ahead of ourselves with where the technology and the tools, it would have taken a lot of work. We would have had to build the tools. Had we had that idea 2 years later, it may have been different because there were tools around some of the things we were trying to do. So, but I think it was good. I think, and Yara, I think it was really important because this was the time where we were trying to start things. Like, we had this idea, we were doing agency and our jobs. Marty was managing a team of developers at his job, and the 0 to 1 just gets a lot different when you have a family and you have different priorities and you want to work at a different speed. This kind of idea of calm and being patient. It's hard to be patient when you're launching something. And, we had Golf Monocle. We have a page on our site. When we started, honestly, it was an agency, but it was also a little product studio. And we have a site, or a page on the site that's like a rest in peace part of all the things that we tried to launch and couldn't and didn't reach, or whatever. We launched the subscription box service called Fan Pack that grew up to, decent size. But then I realized, we were in the fulfillment business, not in the software business anymore. And, so trying to do 0 to 1 without putting everything into it proved really hard for us. And my hat's off to folks that do that. And that's what we love, is there's all these people out there that love to build things. They build them, but then they don't necessarily grow and run them forever. And so we feel like, there's a good symbiotic relationship with that, with kind of where our skills fit with where their skills fit.
Okay, well, take me forward, guys. So you're throwing a few ideas at the wall while maintaining, it sounds like, an agency / freelance work. Family's starting to grow. I like, in my mind, I'm thinking, how do you start a company where essentially you are going to need to have some upfront capital, potentially significant upfront capital, to buy even the first company you're looking to purchase? Can you connect the dots? Like, was there, take us forward from all this experimenting so I can get to Calm, because I feel like there's a bridge I have to climb before I can understand how you guys could start that.
Yeah, so we were having these conversations, and I'll be real short and then let Marty kind of finish it, a little bit baton pass here. But we were having these conversations. At the time, the cash flows from Honestly enabled me to start looking for things to buy as like an experiment to see if we could do this. I'd been building a relationship with an individual who had experience in buying and selling traditional businesses, and I felt like there was a lot to learn from these businesses that have been around for hundreds, 50, 100 years, that are being bought and sold, that I could learn and apply to the software side, which, it was fairly early when people were starting to buy SaaS products. And so this individual helped me buy Pttrns, which is the first thing we purchased, which is a design content site, subscription site. And we learned a lot through that process. Marty and I talked through it. This individual named Mike helped us. And then after that, and we were able to buy it, keep Honestly running, grow Pttrns, like 12, 16% the first year we had it. we said, oh, okay, well, maybe we can do this. And so I went back to Mike and said, hey, and I told him the Basecamp story, where Jason Fried and David had Jeff Bezos kind of basically front them so that they could stop doing client work and focus on building Basecamp. I don't know if you've ever heard that story. So I got to mention that story to him. I said, do you think there's a world that could exist? Is there a world or an opportunity where Marty and I could do something like this? I mean, we have Honestly, and we have Loft, and we have Augusto. We have these companies that have some value and some cash. And he thought about it for a while. He said, well, let me talk to another friend of mine that has more experience in doing this guy named Steve. And they got together and they said, you know what, we like you guys. We like where this is going. We'd be interested in helping you put this together. And so they've been kind of mentoring us, helping us with some of the financing, and that's kind of how we got started.
Okay. Before we do pass the baton back to Marty. Oh, sorry, Marty. You can help clarify a few things here because David covered a bunch of stuff that I want to know more about. You said you were spinning off capital cash from Honestly. That's your agency. And then you made your first purchase, Pttrns. Do you mind just talking about even the numbers? Like, were you saving, $5,000 a month from cash flow from a business? You save up to $100,000. Then you go on, like, to me, it's like I go to Flippa or I go to Microacquire today or FE International and buy a website. But maybe Marty, David, I want to give equal turn to both you guys, can explain some of the numbers behind it all.
Yeah, I'll try to talk specifics about the Pttrns deal, and then also add in a little bit of detail around forming up the Calm Capital partner team and all of that kind of stuff. So correct me if I get these numbers wrong, David, but the Pttrns deal was really interesting, and it's actually an interesting. I'm really glad that David did the experiment, and it was mostly him, right? But he included me in it, even though I wasn't technically in it at that point because Calm Capital wasn't a thing. But we kind of talked through every step of the way. And if I recall, the owner of Pttrns tweeted and said, "Hey, I'm thinking about selling this. Anybody interested?" David responded, "I might be." They started talking. It was a very, we didn't, like I said, Calm Capital didn't exist then, but like the way that transaction went down was very calm, if you will, in the way that we define that, right? It was on Twitter, casual conversation, no broker, short conversation. And David was able to put a very small amount down. I might get these numbers wrong, but let's just say the whole deal was $125,000 total purchase price. And there's seller financing over a couple of years. And it's a little more complicated than just seller financing, but like there's an earn out with some benefits to keep them involved and advocating for the Pttrns community over a couple of years. And David out of pocket is like $1,000 cash out of pocket. Because there was so much cash flow, they did a note directly to the new Pttrns, if you will, for $100K. And that's basically the Mike guy. So Mike, our partner, was able to say, "Hey, this is a simple note and a cash flowing business that's pretty straightforward." And so that was the experiment. That was to say, can we finance this in this way? And they did. And so there was enough free cash flow in Pttrns to be profitable and still pay off the note.
Okay, just to clarify, because I understand, Mike is a guy who's experienced in the world of buying and selling businesses. Sounds like more offline. He's like a bit of a mentor to you, David, at the time. You guys come to him with this business Pttrns that you've built up a relationship with, and you're talking about acquiring. You need $125,000-ish up front to just get the deal started. You get a note, which is essentially a form of a loan from Mike. He gives you that cash. You do have to pay it back, but you can use the cash flow from the business to pay it back plus interest. And then you essentially do that deal. And like you said, David only had to put down $1,000 of his own money, and then you now own a business. Is that about right?
Yeah. I mean, we I had, through honestly the cash flows, I think I had about somewhere in the $60,000 to $80,000 in the bank from Honestly's overage revenue, above what I made and all that. So I'd been pretty frugal. And, Mike was like, well, yeah, you can put all your money in, but what if you could keep your, you don't have to. Like, there are 100 ways to do this. And, between Mike and thinking about, we had heard the story from JD Graffam, who'd be a great person to have on this podcast, how he bought his first business, which wasn't Ballpark. I don't remember which one it was, but, and he had done something kind of similar. And, Mike and I just got talking about it, and he was saying, well, what if you went back with this? And we ended up doing like, the earnout kind of, which was technically an earnout, but it was like a rev share, a guaranteed rev share of this amount or this percentage of revenue, so that the seller could get more for the asking price if, the business grew and they were involved. And so we did that. They were able to benefit from that. And that gave the seller a chunk of money to take some chips off the table and focus on the new startup he had, as well as, monthly revenue stream for a couple of years. And then, the cash flow, the note payment was like, 25% of the free cash flow or 30% of the free cash flow. And, it was 80% profit margins because it's a content business, and it was worked out.
Yeah. Okay. I appreciate the specificity, guys. That's really interesting. You mentioned Augusto, I think, when you were just talking before about 3 entities. How was that involved?
Yeah. So Augusto is a custom software development company, so a consultancy, and I helped co-found that in 2016 with 3 other co-founders, we started building that up, and that's a successful company now that has some of the founders are still actively operating the business daily. I think all the other 3 work full time, near full time in that business. I do not, so that's what that company is.
So you were able to take your share of the profits of Augusto into Calm Capital. Is that right, Marty?
Yeah, really, how we did it is we kind of just transferred my equity into being owned by Calm Capital instead of me as an individual. We had enough relationships with the partners that we could explain what we were doing and have those conversations, and that there was a vested interest for everyone involved. And, I was able to essentially not have to have a paycheck, if you will, and relieve that operating expense back to Augusto so they could hire a replacement. And so it worked out for everybody. And what's nice too is, we obviously have a lot of different software projects that come up in the mix of Calm all across the Calm Capital companies, right? And we're able to bring that business to Augusto when we need a reliable dev shop.
Yeah, the synergy is nice. I like that. You mentioned salary there. That is a question I am curious about, especially going forward with your plan for Calm. So I can imagine, David, obviously you had Honestly, which was paying you a salary. Marty, it sounds like you kind of transferred your salary from Augusto into Calm Capital, so you were able to kind of, take it out there whenever there was profits. Was the plan, and I'm saying that at the point where you only own Pttrns, Augusto, and Honestly as, I guess, your 3 companies. So I guess that's like foundation point for Calm Capital. Was the plan for you eventually, in your minds at that time, to exit all your kind of operating roles from those companies to 100% focus on Calm? Was that when you started thinking about that?
Yeah, I would say we're still even in that process, right? Calm's been around for almost 18 months here, right? 16 months. So we're still in that process a little bit, right, of being completely out of the operating roles. We were just talking about that, David and I were last night, about how how you just have to be patient with that, right, to not basically get out too soon, but at the same time how we're starting to see it really pay off as far as just having really talented people who love kind of what we're doing at Calm. They love the idea of working at a Calm company and being accountable and incentivized, to take leadership over the operations of the companies. And so, for example, at Augusto, we've got a new gentleman, Jason, who's the director of operations, which is a role that I played for quite some time. And he's just changing the business so fast. Like he's making improvements. He's really has the reins. Allison, who is the CEO of Honestly, for example, she's amazing. And she's got her own vision, her own plan. She's putting together her own leadership team. And she's just got tons of momentum there with her own business. Right. And so, when we bought Proteus Themes last June, I think it was, we hired a CEO right away, and he was part of he got put a little bit of capital in as well, so he's a partner and the CEO, which is great. Our newest acquisition, we hired a CEO during due diligence, or recruited and identified during due diligence. So the transition from day one was directly to him. There's a new CEO at Loft, our software support company. So I could go on and on. These people are, so many. We were talking last night. They're better at that role than us, right? So it's not just about us freeing up our time so we can focus on Calm Capital, but it's also about where we want to spend our time and what kind of where our skills and talents are as well. It's just getting alignment and getting the right people in those seats too. Again, back to the whole idea of like what's best for each company, and collectively that's what's best for Calm.
Yeah, you're reminding me of what I've heard from both Tiny Capital, Andrew Oakelson, and Startup.com. I think Austin Reef, I'm not sure his last name. Both of them have said you kind of transition away from being a founder to a hirer of CEOs. That sounds like you two, your jobs is basically that, to put in place the right leader in these companies that you acquire. And it sounds like you're becoming very skilled at that. Can we just connect the dots of the story though? So you've got the three companies. And what I love about it too is you actually had a unique funding method from day one. It's not like you put 100% of your own money in. I did that with a couple of purchases I made early in my career, but once the money's gone, there's no more to spend. So I can't keep acquiring businesses maybe 2 years later when I save up some cash flow. So this kind of method of having a backer from day one is great. So can you take us to day two? So what was the fourth company that joined the Calm brand? And is that when you started calling it Calm Capital?
Yeah. So when we started Calm Capital, the conversations really started in earnest. I mean, we had been talking about this kind of idea for a long time, but Calm Capital itself, hey, let's really do this. It was, spring of 2018. Is that right, Marty? 2019, spring of 2019. At that point, Yara, we had Honestly, which was the agency I owned wholly, Augusto, which Marty was a founding member. We had Loft that we had created with the partners at Augusto and another friend that was in the IT business that we were had interest in. We had a startup called CrewPay that we were working on. We had Pttrns. We had a minority stake in LifeFinder. I think that's it. And with those, we said, okay, they're worth this, and that's what we're going to bring, to the table. Plus, some of the cash that was in those businesses to start Calm, and so those conversations kind of led us through that the rest of that year, and then we launched Calm Capital in January 2020. and since then had acquired Prettiest Themes and Wave, and started Catch Commerce, which is a Shopify app store.
Okay, so there's a lot of acquisitions there. Have you sort of, and some companies you've created by kind of merging people from the current companies? So it's a lot happening. Can you take us through maybe one of the other deals? Because it sounds like the numbers probably get bigger too. So do you just borrow more money from Magic Mike and his team over there, or
Funny? No, well, yeah. I mean, it is a combination of everything. I mean, I think I'll let Marty's better at articulating these things, but I think the bigger thing to think about, Yara, is our thinking is a lot of firms and you know, again, we didn't even know like Tiny Capital, like Andrew Wilkinson, you know, JD Gratt, like a bunch of these folks we discovered as we were starting to come up, like really formulate this idea. So you're right, it's a pretty small community, but now, you know, by now, and there's a handful or a good number of people that are doing this. Bigger companies like SureSwift Capital or whatever that are doing this type of thing. But we don't have like, this is the way we do a deal, right? We're going to do this much cash and we're going to take it outright. We're going to own the whole thing, or we're not going to put cash in. We're just going to do earnouts, or we're just going to finance with the debt. Every deal is really a combination of what's best for the seller, the selling founder. Like, what do they want? What's their dream outcome? How does that line up with what Calm Capital can have a really good business with, and that fits into the way we want to do business, which is patiently, purposefully, and profitably, right? So that said, of the acquisitions, some have been more cash than debt. Some have been earnout. And we haven't done that many. And then like the most recent one it was the biggest one we had done. So it was a combination of, we brought in another partner, partner that
is that Wave, David, just to clarify?
Yeah, for Wave. So
okay.
Calm Capital owns a majority interest, but there's another partner called Wilmington Holdings that is a partner in Wave. Marty and I put our personal cash into that one. Calm Capital, well, we put our personal cash into Calm Capital. Mike and Steve put cash into Calm Capital, and then we put Calm Capital put cash into Wave. Wilmington Holdings, you know, put some cash, and then the selling founders, this was their baby, and they thought the best days were ahead of it, so they wanted to have some upside, and so we kind of orchestrated. Again, it's technically an earnout, but it's not. The framework of it's maybe more of a rev share type model that they are getting like a guaranteed, you know, payment. And so I'm not sure if that's answering your question as much as every deal is we approach as its own thing, and what's best for the company, what's best for Calm, and what's best for the selling founders. Those three things that's what we're trying to line up.
Yeah, I think maybe I'll talk a little bit about the Proteus Themes deal we did last year, to kind of just give another example. But I think the key thing that we decided, we might change our mind someday. We reserve the right, but right now we've decided that we don't need to go out and raise a fund in advance to have capital ready to deploy and go make purchases with necessarily. Obviously, our Calm Capital, partners, Mike and Steve, have influenced us in that to say, hey, just take each deal as it comes and be patient and let's figure it out. Right? There's usually several ways to get the deal done. There's more people that we can talk to. And we really learned that lesson in the Wave deal this past year. But let me go back to the Proteus one, because it's actually more similar to the Pttrns deal structure, in the sense of we just looked at the price. We negotiated an asking price, pretty good discount off of the asking price. So we. And the way that we did that is they were asking one price, but only a portion of it was recurring revenue. And so we kind of like split up the revenue and gave different valuations. And so that was not step number one, is we felt like we wanted to get it to the right price, at least the right price for us. And then step number two was, we just looked at the math, and similar to Pttrns, we said we could do a 5-year note on this, directly. So Calm Capital puts money directly into, Calm Capital owns the equity, but the note goes directly to the company, the Proteus Themes, and that's how we did it. And so it's just a liability on the balance sheet of Proteus Themes, and it's part of the cash flow that you have to manage. And it's a small enough portion of the revenue that it works and makes sense. And so it's really simple, really straightforward. And Calm's able to hold that equity, and see the profits, but not hold the debt.
Yeah, so it's kind of real estate, like, right? Like we wanted to put enough. We had money to put in, but we only put as much of our own money in our partner, who's the CEO, David, put in enough his money. We only did that to the point where we could get the note to our comfortable threshold of pain for the cash flows of the business. So very much like buying a house, right? You can put enough down so your payments and everything fit, and you de-risk. You don't over leverage yourself, but you're able to have an appreciating asset that you didn't have to put the amount, all in.
Yeah, it makes a lot of sense. Do you guys mind talking a little bit about how you decide what to acquire? Because I can understand the financing now. It's obviously going to be different every time, but you must be looking for some typical characteristics in an acquisition target, even just to pay off like a note. There has to be enough, positive cash flow there to do that. So what do you look for in a target?
Yeah, definitely. I mean, you're looking for all the kind of the attributes, I'd say, of a good business, right? And so is it in a market that's going to support the product or the community over the next 5-10 years? So we're definitely don't have like a quick milestone timeline that we're looking at, right? So we want to that's kind of part of our patient. We want something that is going to at worst case die slowly, and that's going to be around. So it's got to be in a market. It's got to have pretty high margins, right? So it's got to have really optimized cost structure. It needs to be operated. There needs to be some bit of I'd say either a team that it comes with, or there needs to be enough free cash flow that the team that we'll need to hire is paid for right away, right? We really do look for it's already established product market fit. That's why we're buying, not building. We look for validation through large customer bases over many years. So I don't think we would probably buy too many businesses that are younger than 4 years old. And when you look at some of these customer base in the lists, there's a lot of value in them in addition to the revenue, right? So when you buy a business that has 200,000 customers or 50,000 customer list, we understand there's a lot of value there as well, potentially to cross market to, or potentially just to increase our engagement with those people, right? And reach out to them, learn what they wanted. Let's say they're not an engaged customer anymore. What was missing? What could we offer? So there's so much there that with those larger lists of in communities or customer bases. So I think that's a huge thing that we look for as well. But yeah, I mean, you can see that obviously it's in a good market where the total addressable market is larger than the current customer base, but the current customer base is substantial enough that there's a lot of value there. And then just the financials of it as well. Looking for trends, right? So let's say it's not. Let's say it is growing. Do we think that we could take growth from 2% month over month to 4% month over month, for example? Or let's say that it was at a certain MRR a year ago, but it's now declined, but we think there's a good reason that it declined, that we could get it going back the other way. So I think that, those are it's trying to make those bets, right? So kind of taking all those things into consideration. But I don't necessarily think it's one industry, or one, we have both SaaS and we have subscription. I don't think that we have a super strong opinion either way on that. So I could probably add more stuff, but that's kind of what comes to mind.
Well, I was going to ask, because I know, I find out about you guys from Wave. And now Wave, for those who don't know, it's a tool for taking podcast content and making social media, video, snippets type content very easily through a SaaS. You've already mentioned, I know, Pttrns. I had a look at that site before. It's kind of like a Pinterest-style content site. I'm not sure if I'm saying that right. I had a very brief look at it. Then you said Augusto is a software dev kind of agency, if that's correct, or I'm not sure I'm butchering that one. Proteus Themes is themes for websites. And you've got your own agency, honestly. Obviously, no style of business there that sort of, you could say they all fit in the same basket. But I know, even from my own experience operating some of those types of businesses, profit margins on a content site, as you mentioned before, 80%, huge, fantastic, amazing. Profit margins on an agency can be all the way down to 10, 20%, depending on how the agency runs. So it's obviously not a business model, or there's not like a sweet spot in profit margin. It just, overall, the numbers have to work for what kind of deal you're trying to put through. And that could be anything by the sounds of things.
Yeah, I want to comment on the agency thing. Part of it's just the origin story, right? Of like, do I think Calm Capital would go out right now and buy agencies? Probably not at the top of our list. But would we grow honestly through honestly making an acquisition of another agency? We would consider that, right? So that's a way where Calm Capital could potentially help finance or fund that situation where, we could, which happens all the time with agencies, right? So I don't know as though Calm Capital would go buy another agency or another software dev shop, but could we be in a position to potentially help those businesses grow within themselves, inside their own business model where they want to grow through acquisition. So that's a way that we would do that. To your point, I mean, we love the dynamics of SaaS and subscription businesses, obviously, versus client work. Yeah.
Yeah. Okay. I know you guys have got like 3 minutes before you need to potentially meet with one of your founders. I know you also said you could extend if we need to. I really only have a couple more questions, so you tell me, guys, how you want to deal with this. But
we can keep going.
Okay, cool. Appreciate it. The future here for Calm, like again, for me, Tiny, I've known about for a long time. Andrew Wilkinson's also Canadian, so I'm always on the radar about the Canadians doing things. He's over in Victoria. I was living in Vancouver for a while. They just floated on the Canadian Stock Exchange, the whole Tiny Capital group. $100 million a year in revenues. I know, even for me personally, I'm like, I kind of want to do what you guys are doing. It is a way to really get involved with multiple projects at once without being the one responsible for them, which I think is very smart. What do you plan, though, for the future? Is there a specific goal you're after? You're kind of just rolling with it and seeing how big this could get?
I think it's more around it staying within the way we want to do business. So it doesn't really have obviously there's a number involved. We want to grow revenues, right? But our first revenue goal is probably not our ultimate revenue goal. We don't have like, hey, we want to have 20 companies, or we want to have 50 companies, or 5 companies. It's really just like, how can we create the most value in a calm way, in that patient, purposeful, and profitable way. What does that look like? I think we're still learning where we'll get to, but I think we'll know, okay, hey, we are not operating in the way we said we would want to operate. Let's get back to that, and what that looks like, I think is where we'll land. So we we talk enough about the stuff that it's never kind of gets off the rails. So, at least so far. I mean, we're 18 months in. So, guys like Andrew that have been doing this for 8 or 10 years have a lot more probably experience and thinking through those things. But, like as someone that who built an agency with the model of never having any full-time employees, the fact that we have almost 80 employees within is very interesting to me, because I never thought I'd have like HR kind of issues or HR stuff to talk about. So, but I think it's more around like, where can Calm go? How do we continue to create value, continue to have an environment where people can work and succeed and thrive in this idea of being patient and being purposeful, and then where that shakes out is where it shakes out.
I would like to touch on just the CEO hiring aspect, because I do feel like that is a skill set that isn't readily available. Like it's a unique position to need to continuously hire CEOs on a regular basis. Not many roles in our capitalist culture have that kind of function. Maybe the boards of directors might, but you guys are kind of doing it as your job in some ways now going forward. So how do you find a good CEO? And I say this a little bit because I'm potentially looking for one eventually for my own company, Inbox Done. I know my co-founder and I have talked about putting someone in place there eventually. And it's hard because it is a very responsible leadership role, which you're kind of passing on your baby to as well. And you guys do it in a way that's very disruptive, or maybe ideally not disruptive with your calm approach, but you're trying to take on a company, potentially the current founder or founders are leaving, and you're then putting in a new CEO. And you don't necessarily know how well they're going to do. So it's a big part of your business model working. So you obviously have to be really good at that. So how have you found that role so far, and how do you do it?
Well, we need to have a call in about 2 years or so, and you can ask us that again, and we'll all have a better answer, right, about whether or not we're good at it. I'll just answer with where we're at and be vulnerable and say, you're exactly right. It's an important thing for us to be good at, and we're not sure that we are necessarily good at it yet, but it's something that we're really trying to focus on. I would say the biggest thing is trying to find a good people fit. So when people hear the word CEO, they probably have some kind of image of what that means, and I think for us it's ideally, we would love to find someone who has, Andrew talks a lot about this on his, where I learned that I want to, he said, I would learn that I want to hire somebody who's already done that and is currently interested in running this company, or, and then we align on their needs, incentives and compensation and all that kind of stuff. We'll get there. But where we're at right now is we've cultivated 20 years of relationships. So either first degree relationships or second degree relationships. And we know people who are, executive, experience and capabilities, but they're also typically subject matter experts in whatever capacity they need to be. And then you're trying to, just have lots of conversations with them about what more of in general where they're at in their career and in their life, to make sure that they are excited and ready to engage in this, and then of course just really clear expectations about what it means. The growth aspect of it, the general management aspect of it, the HR aspect of it, because these aren't huge companies, right? Each one individual is going to manage a small team. So when we use the word CEO, I mean, they have to obviously be able to know what needs to get done based on some kind of strategy. They have to come up with a plan of how it needs to get done. And really they have to learn how to become good allocators of resources, right? So there's a certain amount of resource constraints in these businesses based on how big they are. People resources, capital resources, vendor resources, all those kind of things. and they have to be able to know how to make all the hard decisions that we all have to be as capital allocators, right? And so that's where we come in to be kind of like background support to that, like helping them think through and prioritize and synthesize and just kind of be pointed in the right direction. But so far, we've I think the word that's coming to my mind as I'm talking through this in real time is we're learning a lot more about just having how to have candid conversations and just really, really clear expectations about outcomes, right? Which is just people management in general and performance management in general. Because when you put somebody in that role, if they, even if they have been in it before, they're also just, performing to those expectations, right? And so being really clear about what those are and what matters. So here's an example. David and I talk about like, hey, we just need to be these businesses because we're patient. We just need these businesses moving forward. They just need to always be moving forward. 1% a month growth, 2% a month growth or more. We don't have to, 10x these things. The way that we're financing, the way that the return that we're having, we truly are. They need to be profitable, and we truly are patient. And so that's a different request to a CEO, right? That's a different ask than probably other CEOs in different situations that are in different kinds of companies. So I think just really being clear about those expectations and having candid conversations. But again, it is, you hit the nail on the head. Like, it is the number one thing. And I wouldn't even say that about it. It's about the CEOs. It's also the ops people and the CTOs and right. Like it's overall, we are talent finders and talent matchers now, right? Like that's what David and if we need to be great at anything, it's finding great people.
I can hear you, David, because Marty, great answer. But David, I know you said you never worked with employees before. I'm the same. I've always built businesses with contractors, and it kind of like what you just described, Marty, is you two are both HR managers now for 10 different companies, which actually doesn't sound as exciting. So,
well, with the actual HR issues are we let the companies handle those, right? We just handle the fun parts. Just messing.
Okay, well, let's wrap it up, guys. I really appreciate your time, and I know you've got to get going to talking to some of the team. I have one, I guess, is my kind of stock question to finish this off now for the version of my show I'm calling Vested Capital. This business model you guys are operating with is almost like a perfect example of a vesting capital model where you're gaining leverage from building teams, acquiring companies, letting them run themselves in many ways. So your capital base is growing without you being too actively involved, and then you're leveraging other people's capital to get the deals done. So there's plenty of examples in your story. And I know it's early too, so this might be you guessing about the future. And this is sometimes sounds like a bit of a cliche question. Do you expect what you're doing now with Calm Capital to be your personal greatest source of capital creation for you two as individuals going forward? Or do you think maybe still running your own agency and just spinning off profits from that was actually the way you ended up making the most money when you look back maybe in 10, 20 years?
Our hope is that, right? We even though it's not, we talk a lot about Calm Capital, internally almost being like a family office, right? Like we see the lion's share of the capital that we create going into Calm Capital to be able to do more things for our families and the other families of the company, that work in the companies and within Calm Capital. I didn't say Calm Capital was a family, but there are families that work within, Calm Capital, right? So we do, we do see that. And I would say regardless of, if this works, right, then it produce the most revenue and all of those type things. But I think it's more around the how do you define success? And success is more than just the revenue that comes in. It's kind of the whole picture. And we do see Calm Capital as the vehicle that gives us the success as we've defined it.
Yeah, I agree. Time will tell, but this is a dream. I mean, this is a dream come true for me and David. Like, we've talked about this for years. I mean, we love working. We love doing business. We love all the things we're learning. We have so much to learn. We feel like we're, out of our element at all times, and and like the fact that we get to do this is, we're very grateful. The fact that we get to do this together is really amazing, and I'm really enjoying seeing our teams grow and all of the opportunities that we're creating in the world for people to make a living and earn a living in an interesting remote first culture in most cases, right? And it's fun. It's fun to create all these opportunities for all the different people in the businesses. And so I hope so. It's great so far.
Yeah, no, it is. I appreciate your answer, guys. I know a lot of what you're doing is so hands-on with people. Like, I can imagine the personal satisfaction comes from seeing them grow and the companies grow and everyone, getting something back from that. But on the flip side, I also think of Berkshire Hathaway, like David and I were talking before we hit the record button, how Warren and Charlie, putting together companies much like you did, and then a lot of those companies put off a lot of cash flow. This is so fresh in my mind because I was listening to the Acquired podcast. Those guys, David and Ben, did a deep dive and are still doing it in their Berkshire Hathaway episodes. I was thinking from that, it's, the float they get from an insurance company provides so much cash flow that they reach a point at some point where it's like, do we keep buying companies? When do you take out capital for yourselves and your shareholders? Obviously, you could float on the stock market as well. That's another way to create wealth from all this capital coming together. So it's an exciting future. I think you guys certainly have, depending on how far you end up taking this from a growth perspective as well. But obviously, you got to enjoy the day-to-day, which I think you two are definitely doing. So thanks for sharing the story. Website, is it calmcapital.com the best place to go? And I should actually ask you, too, if there's a listener on this podcast who might be thinking of selling their business, should they just send you guys an email?
Yes, the website is the best place, and there's our contact.
And before we jump off, Yara, I do want to say thank you for doing this. I really appreciate the change in focus of your podcast. I've listened to your podcast for a while, off and on, because you go through like seasons with stuff. But I really appreciate the focus you're making towards this because I think this is somewhat, not necessarily Wild West, but this is somewhat of a new idea, right? You have these institutional investors, you have PE firms, you have venture, you have family offices and things, but there's more opportunities. We were talking to these two guys not too long ago, Daryl and Nick, that bought a company off MicroAcquire, right? And they're trying to figure this out too, right? It's a small company. They want to kind of snowball it, to use a Warren Buffett kind of term. And what you're doing with this podcast, I think is going to be super helpful. I'm really excited about listening to future episodes. People could probably skip ours, but they can listen to some of the others that you're going to have where, I think it's just going to help us grow Calm Capital more. So I really appreciate you being committed to this focus and making the adjustment to your content. So thanks for that.
No, I appreciate it, David, and it's totally selfish reason. It's just a topic I love too. So and a topic I want to practice. I don't want to own just one company. I want to own several. So it's grow your capital and have more projects to play with. But I really kind of look to you guys as an example, and some of the other few examples we have too, because I've struggled to have time to frankly, do, more than one company and break that rule where you're making one company suffer because you're off trying to start another one. And that's something I've done too many times, I think, over the years. So finding ways to grow, put people in place, know that the company's still growing without you, start another project, and finding the synergies perhaps between those two. Like you guys said, often it's the relationships, or you can bring in the CEO because you knew them from the other company that you made a connection. There's all that kind of synergistic stuff happening, which opens up these opportunities. So I think it's important to kind of have that focus. So I was so glad when you guys said yes to come on the show, because yeah, we're catching them maybe a little bit early, but hey, you guys have 10 companies, $8 million annual revenue, diverse topics and business models within those companies. You're only going to keep growing. Yes, there's not many of you, but I do feel like because the idea of buying and selling businesses with MicroAcquire, with FE International, with Flippa. I mean, I was buying on Flippa 15 years ago when you just bought a website and, it made an extra couple of grand and you had it sit there. It wasn't like you were trying to build a holding company, but, nowadays people think bigger and that's the way they go. So this is only going to get bigger and I can't wait to see, like you said, David, where it heads. So, but yeah, thanks for sharing the story. Appreciate your time. Let's keep in touch.
Yeah, likewise. Thank you so much. Pleasure was all ours.
Yeah, thanks. Really appreciate it.